All right, welcome back to another episode of What's It Up To? Today we're going to look at Beyond Meat, take a glance at its financials, where it stands now, and what you don't like to see as an investor in a company. And if you like this kind of content, please consider subscribing. That way you don't miss any videos in the future. Nonetheless, I hope you find these entertaining because that's really what they are to me. It's just fun to do. And if you also want to watch my journey on selling puts and calls on the side for some extra income, stay tuned for those videos. The most recent one's this, if you want to go check it out. I was looking at Tattooed Chef today because I own a few puts that I bought on it, and I saw it go down in price. Therefore, the puts went up in value. And then I was also looking at other plant-based stocks to see if there was something going on specifically because they're down more than just the general market. Beyond Meat was also down about the same amount as Tattooed Chef today. Beyond Meat, another plant-based food company, if you don't already know, probably the cousin of Tattooed Chef, the more popular, I would say. One thing you definitely don't like to see is the average estimated revenue by analysts going down year after year, especially with a company that should be revenue growing. We can see the current year, well, last year, I guess now, of 2022, the estimated revenue by analysts was $414 million. Next year, or this year, 2023, less than $400 million. And if we take a look at their earnings history, we see that the estimated earnings was negative 71 cents. The actual was negative $1.27 back in December of 2021. The next quarter estimated was negative 98 cents. The actual was negative $1.58, and so on and so forth. You can see that the actual was far less than the estimated. Not a good sign. And here we see a surprise percentage negative each time. And I think something that keeps occurring should no longer be considered a surprise. Let's also look at some of their financials. I didn't really look at this beforehand, so this will be us looking together. Here we can see the quarterly revenue as a bar chart, and something you definitely don't like to see, as we just saw before, is declining revenue on a company that should be gaining revenue quarter after quarter. Here we see gross margins that were once positive, now negative, and profit margin is just getting drastically more negative as the quarters go along. Here we can see negative 123%. Now I'm curious how much cash they have on hand right now. Because if we look at Tattooed Chef, they are pretty much hemorrhaging cash. And if we look at this, it kind of seems like the same thing. They're losing cash quarter over quarter at a rapid rate. And then we also see total assets is less than the total liabilities, meaning if they would have to pay up everything, if the collectors are coming all at once to them, they couldn't pay up what they owe. And that's basically as much as I can comprehend from this. Overall, it seems like a similar story to Tattooed Chef, and I'm curious what you guys think as well. Thanks for watching, guys. Really appreciate it. Hope to see you in a future video, and take care.